Thank you for joining us, Derek. First up, let's talk to you about why you would possibly invest in a Chinese property market which looks at best toppy.
Good morning, Trish. First of all, I think all of us agree that the engine of growth in Asia itself will be all looking towards China and India. So I think moving forward for the next 10, 20, even 30 years, I think we will be looking at China itself. So I think that's where we'll head towards. Yeah.
So it's a long-term bet you're talking about. We're not just talking about China per se, but certain parts of China where property has lagged.
That's right. That's right. I think in China you can't be going in for a quick in and out. You have to play it long term. And I would say the first tier and the second tier cities has gone up quite a lot. In fact, some of us are looking at the third tier cities for opportunities. But I would say moving forward, we are looking at direct investments into assets over there. But probably because of the difficulty in having the capital inflow and outflow, we usually look at what we call WFOE structure. Wholly foreign-owned entity structure, where the entity will own the assets offshore.
Okay, how does that work exactly, Derek?
Okay, basically for a lot of the assets in China itself, if you were to buy direct in China onshore, basically you have to go through quite a bit of a capital, so-called getting the license and things like that. So if you will if the asset is already held offshore, it makes it much easier. A holding company could be holding the asset, let's say in Hong Kong, and you could just transact in Hong Kong itself, and that makes it the transaction a lot more easier. That's right. And also in terms of the risk, yep.
Go on, Derek. Sorry, in terms of risk as well, you've used some mitigating the risk.
In terms of risk, uncertainty, and the tax uncertainty is a lot more manageable in that sense. Yeah.
What about the recent moves by the People's Bank of China to, well, loosen the peg on the yuan itself? If we see appreciation down the line, that of course will help you too, won't it?
Yes. I think a lot of people are going into China. Basically, one of the reasons that they are hoping that the yuan will appreciate, and even with so-called not too much of an increase in the capital value of the asset, they still have a decent and good return. But like I said, it's quite a complex issue for the yuan valuation itself, because I'm sure the government in China is also looking very closely and finding a balance between the pressure that they're facing at the same time, whether to push it up and affect their export. Yep.
Derek, very quickly as well, where else are you looking for property? I mean, not just in Asia, looking in Europe. I know you've got assets there. What about the likes of Singapore and Hong Kong? Hong Kong market, many people are saying, is in a bubble which is about to burst. What's your view, very quickly?
Okay, I'll say we are very, very positive on Singapore. Hong Kong, we see not a bubble, but there's some pressure on the price. But I think commercial assets-wise, I think we are still very positive. Korea and Japan are two other markets that we are closely looking at.
Derek, thanks a lot for that. Have a good one. Have a great weekend.